Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience at SmithWeekly, including Michael R., Thomas N., Jared W., and at Prospector Jeff. We have a new guest of a returning company with us today. Mr. John Cash is on the program. John is the Chief Executive Officer of UrEnergy, a U.S.-focused uranium production-ready company with its Lost Creek and Shirley Basin in-situ recovery projects in Wyoming, United States. UrEnergy is a uranium portfolio holding at SmithWeekly Research. The company is listed on the New York Stock Exchange under the symbol URG and also on the Toronto Stock Exchange under the symbol URE. Mr. Cash, welcome to SmithWeekly Discussions.
Hey, it's great to join with you. It's been a few months since we last spoke with UrEnergy and you, so it's good to catch up again and talk about the market and talk about our company.
Absolutely, John. Good to have you on, and first time on the program. Congratulations on your new CEO role at the company. But first, for the audience, how about you just give us a bit on your background and experience in this tricky uranium business?
I'm an old timer in the industry. I hate to say that, but it's turning out to be true. It's really the only commodity I've ever worked in my entire career. Started back in 1994 while I was still in college. During that time, I worked as a contract geologist for two separate majors, doing exploration work in the mid-continent of the U.S., looking for copper gold uranium deposits, chasing the Olympic Dam model. And after that, worked for BHP for a while, doing similar work. Moved on to work out at Smith Ranch here in Wyoming, doing exploration geology, followed by regulatory affairs. Ultimately, Cameco bought out that project, worked for them for a number of years, doing EHS, regulatory affairs, permitting, but also got involved with operations over at their Crow Butte facility. Then in 2007, got a call from UrEnergy, made the jump over here, and have been with this company ever since. And it's been fantastic, great company to be with, and have enjoyed it immensely. With UrEnergy, I've done regulatory affairs, did the permitting for Lost Creek and also for Shirley Basin. Been heavily involved in that regard. A lot of lobbying in DC, working on the Section 232. Have kept my finger on the pulse of production and been involved in pretty much every aspect of the company. So it's a great time to fill the position of CEO with a great company. The wind is at our backs right now with the rising price, and just exciting times, and looking forward to see what's going to happen over the next year. And I think great things are ahead of us.
John, I like a lot of your comments, and just for the audience, you're a very key person at the company and always have been. And, I think folks should be very happy to have you on board here as Jeff steps away. And I think you're a guy that generally a couple of years ago, a lot of people didn't pay much attention to, but you've been in the background for a long time and you're a key person. So I think that's good to point out. And how about Wyoming? Tell us about Wyoming. Obviously, you must like it there. Give us your thoughts on Wyoming.
No, it's a great state to live in, and it's a great place to work in. One of the big advantages to working in Wyoming is a few years ago, the state took over for the NRC as the agreement state. And so now when you do any licensing action for nuclear material, we don't have to go through the federal process with the Nuclear Regulatory Commission, which is extremely time consuming and extremely expensive. Instead, we're able to work directly with the state of Wyoming through their land quality division. Then they have a subdivision beneath them called the Uranium Recovery Program that has jurisdiction over nuclear material. So for Lost Creek, for example, we licensed it through the NRC. The fees for licensing that were on the order of about $3.3 million. But Shirley Basin, when we licensed it, we held off on licensing so we could do it through the state of Wyoming. And the cost there was really only about $300,000 to $400,000. Big difference in the cost. And I would have to say that the quality of staff here at the state of Wyoming LQD is fantastic. In fact, maybe in many cases better than for the NRC. The state's done a great job of attracting some really good talent, hydrologists, radiation safety people. They really know their stuff, and they know the state, they know the projects. And one of the other nice components of that is when we have an issue, when we need to talk about something, we need to figure something out, we don't have to fly to DC to have a conversation. We literally just jump in the truck, drive down to Cheyenne, in a couple of hours we're across the desk, and we can have a meaningful face-to-face conversation. So it's a lot more convenient, it's a lot easier to work with, it's a lot cheaper, and just so much more effective. But beyond that, the state of Wyoming, we are a mining state, oil and gas mining. That's where the income fills the tax coffers for the state. The state knows that, and pretty much everybody in this state works in the resource recovery industry, oil and gas and mining. So we are familiar with mining here in the state. The state officials are familiar, the regulators are familiar. It's what we do here. It's not out of the ordinary, and because of that, there's tremendous support in the state of Wyoming for all natural resources recovery. We do it right. We have great regulators, great regulations, and we do it right because we live here too, and we want to keep the state clean, keep it well managed, and so it's a great place for our kids to grow up. So fantastic place to be, and we're really glad to be operating here.
Certainly is an exceptional state for a lot of reasons, and I won't go into too many of those, but it definitely is one of those my favorite states in the U.S. if you look at all the states. And I think also a lot of the states who don't participate in natural resource independence initiatives and energy independence should be thankful that they have a state like Wyoming that's willing to exploit its natural resources for the better of the country. And so I think there should be a lot of thankful states out there for the support that Wyoming provides to the rest of the domestic U.S. Well, John, you've worked with Jeff Klenda for quite a long time, and he has done an exceptional job of keeping this company in a good position within the U.S. uranium market. What is your take on Jeff, and how important has he been for the company?
Oh, with Jeff's retirement, he's left the company in fantastic shape, and I'm sure we'll talk about it a little bit later, but the cash position is great. He was able to do that with absolutely minimal dilution to the shareholders. He's done a great job on financings when we need to be, to do that. He's kept the warrants down to next to nothing, and he just positioned us extremely well financially and in the market. I think through his leadership, we are recognized as one of the technological leaders in the industry, and I think we're also recognized as having some of the best quality assets in the industry. One of the very, very few companies that were successful in getting up the permits ready for the mine at Lost Creek, at Shirley Basin, getting up to production and in a profitable way. Really, I'm not sure that there's anybody else globally that can say that. So I think we're recognized as the leader, and it's because of Jeff's leadership. He's brought us along in that regard, and we're going to miss him sorely. I still talk to him every day. He's going to continue on with the company through the AGM, which is June 2nd. And so I talk to him frequently, and hopefully he doesn't mind if I call him from time to time after that and bend his ear a little bit and get some advice and get some insights. But no, we're going to miss him sorely. He's been a fixture in the company for, I think, about 18 years. He was one of the founders early on. We wish him the very best going forward.
I know we both don't like to see Jeff leave and retire at this stage in the market, of course, but we know he'll keep in tune with what's going on, and my suspicion is that even after June, he'll be pretty well tuned in here, I suspect. Well, let's move to the market, John. Over the past 4.5 months or so, notable events have taken place that were not in most of the models. What has been the most important idea that you've taken away from this market during this last 4.5 months?
Wow, there is so much going on. I think, what started moving the market was the green energy aspect, but more recently, SPUT and the Russian invasion of Ukraine really have been driving the market. It's ironic, we were one of the companies that filed the Section 232 petition and really kind of predicted what's happening today. And Jeff was heavily involved with that. And, in preparation for this call, I went back and I watched the last interview that you did with Jeff. And wow, almost prophetic. The conversation that you and Jeff had 11 months ago, kind of predicting what was going to happen. I don't think anybody predicted it was going to happen this quickly. But one of the lessons learned, and maybe it's something that we already had some insight into, is how tenuous the nuclear fuel market really is, the supply in particular, because we have become so reliant on Russia and Kazakhstan. And through one significant event like this, things begin to come apart. And while there are no sanctions yet on that Russian material coming into the U.S., there is so much pending legislation to cut that off from the U.S. side. And counter to that, and tit for tat sanctions, Russia is looking at doing something similar. And this war of words between the U.S. and Russia, I think there's a real possibility, a real danger that that supply is going to get cut off from one side or the other. So, I think what we've learned is you have to be ready. And we've really positioned this company to be ready at Lost Creek and also through the permitting at Shirley Basin. Lost Creek, we're able to bring it into production very quickly at a very low cost. Probably, within 6 to 7 months, we can have it up and running at a £1 million a year run rate at a very low cost. So I think we've positioned the company really, really well in that regard. I'm not sure that there's anybody else that can say that. And then bringing Shirley Basin on, that would take a little bit longer, of course, but not that much longer. 15 to 18 months to get it up to a £1 million a year run rate. I know that sounds pretty quick to a lot of people, especially people who are familiar with conventional mining, but in the in situ world, the capital expenditures are pretty minimal. And being able to build out a facility, we can do it pretty quick. We demonstrated that at Lost Creek when we built it out in about 9 months. So it can be done. We've done it before, and looking for the opportunity to do it again. But back to your question of what we've learned is things happen really quick. You've got to be ready. You got to be ready to feed into those contracts, and I think we're there. We're ready to do that.
John, well, we're going to hold you against those dates that you gave, and
All right.
I think you'll meet those milestones with maybe some room to spare. But some of the peers, maybe not so much. We'll see. I mean, there's certainly a few good peers out there, but there's also some that there's a big question mark with operatorship. So we'll see how that goes. Back to something you said here, the general ignorance that has occurred with respect to U.S. domestic uranium and fuel cycle services. You and Jeff worked hard along with certain other parties in the U.S. market to get the government to act on matters that were in interest of energy independence and impacting national security. This was done with Section 232 petition, the uranium reserve idea, etc. Now, at least to the wiser folks in government, the Ukraine-Russia war has delivered a swift slap on the face to prove the point that was being discussed years ago, as you pointed out. What are your thoughts on these issues outside of the free markets solving the issues? Do you think the government will finally act towards energy independence with respect to uranium in the U.S.?
Great question. I think early on after the invasion into Ukraine, I think the U.S. government and probably even the U.S. utilities, it was a bit of a deer in the headlights. Everyone was somewhat frozen. Is this real? What's happening? What are the implications? And trying to figure things out. But I think we're beginning to move beyond that now, and people are beginning to recognize, yeah, this is real. We've got to find solutions, whether those be government solutions or private sector solutions, or likely a combination thereof. So we're moving into that phase. There's a lot of legislation right now moving forward that really could help us out in a fairly dramatic way. But I'll go back first to a couple of bills that have already been passed, and then kind of work my way up through what's going on right now. So in the last days of the Trump administration, the uranium reserve was passed in a bipartisan way in Congress. It was signed into law by President Trump. That allocated essentially $75 million of funding to help bolster domestic production on the very front end of the fuel cycle, so mining and conversion. The Department of Energy was charged with setting up that program and making the purchases of material. Unfortunately, they have been dragging their feet to get that done. That's been a long time ago now since that bill was passed and put into law. We keep hearing from them. They're doing this. They're going to get it done. Be patient with them. We've heard from them that soon, and I don't know what soon means in government parlance, but soon that they'll be coming out for RFPs to make purchases. Don't know what that means. Maybe that means 3 months from now. Maybe that means a year from now. But they continue to tell us they are moving forward on that. So we are hoping to be able to be a benefactor of that program and be able to sell our domestically produced pounds into that. We do have 284,000 pounds of domestically produced material. The vast majority of that we produced ourselves at Lost Creek. So we've been hanging on to that inventory, not selling it into the spot market, even though spot's pushing $64 a pound. We're hanging on to that because we believe we're probably one of maybe only 2 companies that have any inventory or the ability to sell to the government. So we think we can maybe get a small premium by selling into that program. At about the same time, the Infrastructure Act passed as well, and it has a $6 billion allocation of funds in it. The main purpose of that bill is to provide support for the existing nuclear fleet to keep them up and running, to prevent any more retirements. That was really passed not for national security reasons or because of any threat from Russia. That was passed for green energy because people said, hey, we can't allow these reactors to continue to shut down and expect to reach our carbon-free or carbon neutral goals going forward. So the nice thing about that bill is a big chunk of money, $6 billion, but there's a preference on the dispersal of those funds. The preference is to companies that buy domestic supplies, for example, domestic uranium that we produce. So that program is also being stood up. The Department of Energy is in charge of it. They've gone out for a request for information. Companies have responded to that. And again, we don't have any hard and fast deadlines of when that program will be instituted, but it is up and coming. And we hope that the utilities will say, hey, look, in order for us to really take advantage of that, we've got to be buying domestic material. And so we hope to be able to benefit from that going forward. But in addition to that, post-invasion of Ukraine, there are a number of bills that are out there, 2 of which are being advanced by Senator Barrasso from Wyoming. One is the Say No to Russia bill. Essentially is going to cut off supplies from Russia. That would give us a leg up in the U.S. to be able to produce and sell pounds to utilities if we're not competing with the Russians. There's also another bill that's being advanced by Senator Manchin. So notice you've got a very conservative Republican from Wyoming advancing the nuclear industry, and on the other side you've got a Democrat from West Virginia also passing or pushing legislation for the advantage of the industry. So this is a bipartisan effort going forward. But Senator Manchin's bill, again, is really directed at growing the U.S. presence globally in the nuclear industry from the top to bottom. One of the provisions in that is to revise the USEC Act, and it would essentially cut off supplies from Russia, not immediately, but in the near term. And again, that would give us a big leg up if we can take those pounds out of the market. Those pounds from Russia, I mean, very importantly, have to comment here, they are being produced by the Russian government. That is not a private company producing those pounds. Those are being directly controlled and produced by the Kremlin. And the income that they are making from those pounds that they sell into the U.S. and globally, they go straight into the war chest. And everyone is saying, hey, look, this can't continue. We can't continue to support Russia, especially when we know those funds can be used for their war effort against Ukraine. We're not going to be a part of that. And so I think everyone, including the utilities, are beginning to say, yeah, we've got to move away from that. We can't continue to support these guys. So a lot of support out there coming from the U.S. government, but we are not going to sit here and wait for help from the U.S. government. I think that's a dangerous position to be in. Anybody who is hanging their hat on the U.S. government to help them out that's a bad business policy. So what we're doing is we're out aggressively pursuing contracting. We're going to try to solve this through the markets, not through help from the government. And while we're out there aggressively pursuing contracts for the long term, we're also trying to drive down our cost. That's a very important aspect of what our company has done in the past, and it's going to continue to be a very important aspect of what we do going forward. We're not going to rest on our laurels. We're going to go out, get those contracts. We're going to drive that price down so we're more and more competitive in the global market.
John, I appreciate the comments there. I think, when someone makes the comment, I'm from the government and I'm here to help, that's not the best proposition that you should rely upon. It makes sense that at this point that you consider that there maybe be some requirements and provisions in some of these solicitations, that there's a Buy American Act or a partial Buy American Act, which obviously, extends to other industries in domestic U.S., and that there should be some of those requirements, and maybe some of those goals should be discussed with private enterprise if they are to seek government support for certain things, that be a requirement in that support. And I think you made a good point there as well with respect to state-sponsored production coming out of places like Russia. It saddens me to see the private Russian citizen get penalized in all of this when they're trying to put meat and potatoes on the table and that they have no association. It's sad to see some of the initiatives get targeted, essentially discrimination towards the private citizen, which is never good to see that happen across, casting a blanket, if you will, instead of selectively targeting who needs to be penalized and leaving the rest of the folks out of it. But certainly good points you brought up there. Well, let's get into the company here. How about just a quick update on the capital structure, where we are, John, with cash, no pun intended, shares outstanding, and debt at this point?
Yeah, you bet. So we're in a very good, strong cash position right now. If you take a look at the year-end report, and it contains a cash position up through the 3rd of last month, we had $44.7 million in cash in the bank. Importantly, we've also got that inventory that I referred to earlier, 284,000 pounds at the conversion facility in Metropolis, Illinois. We've been holding on to that, waiting for higher prices and or potentially maybe even higher prices than spot that we can enjoy from the U.S. government program. But we've got that ready to sell, and we can sell that into the market at any point and convert that to cash in about a week. So given current spot prices, that's pushing $18 million in valuation. So, between the two, we've got a great cash position going forward. We have, as far as the share structure, we have about 217 million shares outstanding. We do have a little bit of debt with the state of Wyoming. And we talked earlier about the state of Wyoming and what a great place it is to work. But, when we were ramping up Lost Creek, we were able to get a loan through the state of Wyoming. And wow, what an incredible interest rate, 5 3/4. And so we've been working on getting that paid down. We still have 12.4 million to pay on that. They've actually, when the market was so depressed, they gave us a holiday and said, hey, you don't need to continue to make payments on the principal, just pay on the interest. And so we've been enjoying that. But the full payments are going to be resuming, and we'll have that paid off, scheduled to be paid off by October of 2024. So it's been great to work with the state of Wyoming, and in many respects, including the financing that they've been able to give us. So we're in great shape. Going forward, that cash position is going to go a very long ways toward allowing us to ramp up at both Lost Creek and at Shirley Basin. At Lost Creek, the capital needs to get the well field up and running. We're looking at about $13 million to get that up to a 1 million pound a year run rate. And at Shirley Basin, we're looking at about $30 million to get that ramped up. So you add those two and throw in the debt, we have just about what we need to do all of that. I think if we go out and do any raises in the future, our needs are small, so our raises should also be relatively small. As far as other sources of income, we do have some options that will be expiring at the end of this year. They're in the money. We've also got some warrants that are outstanding. They're in the money, and we expect a little bit of income from both of those sources. It's not terribly material, but it will help round things out for us going forward. In the past, 2021, we have an ATM facility that we drew down on some. Going forward, we might continue to draw down on that some to keep our cash position really strong. But again, our needs are minor. We're pretty well cashed up, even getting into production. So we're not looking to do any big raises at this point. And going back to Jeff, to him, dilution was a dirty word, and it's going to continue to be a dirty word. And so we're going to try to protect our existing shareholders as best we can, minimize that dilution. That's one of the areas where we really stand apart from our competitors globally and domestically, is in the realm of dilution. We run a really tight ship in that regard, and we're going to continue to do that. So yeah, cash position is great. I think we're well positioned going forward.
Appreciate that. The company is in a good position. The debt with Wyoming, pretty friendly, I would say, as compared to some of the debt structures we've seen amongst peers in this sector over the last, say, 5 years. We've seen quite some fantastic deals done on the debt holder side with some companies. Anything you can speak to before we get to my next question here, but anything you can speak with respect to the major shareholders you want to point out?
Right now, we don't believe that there are any shareholders that have greater than 5%. We'll get better insight into that as we approach the AGM on June 2nd. But right now, we don't think we have anybody over 5%. Of course, Jeff continues to be one of our larger shareholders, and hopefully he'll continue to hold those shares. I'm optimistic that he will. And our executive team, all of us hold shares. So we're in it. The interest of the shareholder is our interest as well. So maybe I'll have a little more insight into any more larger shareholders as we approach the AGM. But at this point, we're not aware of anybody that's got more than 5%.
Well, compared to peers, of course, as you mentioned, you guys can get into production and get back up and running within a fairly short period of time with a modest CapEx. John, with uranium where it is, we see, spot and term prices consistently increasing here. Any idea you can give our audience and maybe some investors in the company that are listening, any idea as to when you guys are going to pull the trigger on a restart?
So yeah, we are always reluctant to provide a specific number. We don't want to give that information to our competitors, so we've always shied away from that. But what I can comment on is historically and going forward, we have always wanted to sell into long-term contracts. We are hesitant to sell pounds into the spot unless it's out of our inventory. We don't want to put that money, that precious capital, into the mine and consume that capital to sell into the spot, because that spot price can evaporate very quickly, and we recognize that. So we have always sold into long-term contracts, and that's what we want to do going forward. We're in conversations with utilities now. None of those have borne any fruit yet, but again, I think the utilities are really beginning to appreciate that they've got to have some domestic supply. They've got to diversify out of Russia, out of Kazakhstan, into the Western markets. We are recognized as one of the value companies. We've proven in the past that we can produce and produce at low cost. And I think we're a bit unique in that we can say that. And so they're reaching out to us. We're having calls, we're having meetings. The long-term price isn't quite there yet, but as you said, it is climbing steadily. It tends to lag the spot price. That's not unusual. That's pretty typical, but it's getting there. Ultimately, we may begin to see a bifurcated market where you have prices for Russia, Kazakh material, and you may have a different price for Western world, Australian, Canadian, US pounds, because of the security of that supply. Haven't seen any numbers to that effect yet that would support that, but it sure wouldn't surprise me if we see that going forward. So we're going to continue those discussions. One of my main goals for this year is, if the price gets high enough, is to be able to sign up those contracts get that locked in for the long term, so we can enjoy the benefits of that going forward. And I would point out too, just a final comment there, we've got a lot of long-suffering shareholders who've been with us since Fukushima. We're going to reward those shareholders. We're not going to sell our pounds for break even. We're going to make money on them. And we think we've got some opportunities to do that going forward.
John, great points. Production mix that you have, Shirley Basin coming later, et cetera, I think you guys have some options. And I think the options extend just beyond not just, term contracting, which is important to backstop that production mix, but also opportunistic sales into the spot market would probably make sense because you guys aren't substantial given the amount of buyers out there at this point and the support for it, that smaller quantity movements in the spot market probably can make sense. But absolutely, I agree that you will want to gear things towards the long-term mix and get that established. But I think the way you guys are approaching this is I think you have a lot of flexibility, John, in how you might initiate some of that strategy as things continue to climb here. With respect to longer-term strategy for the company, tell us what you would like to accomplish with this company, say over the next 5 years. And do you see a sustaining business? Shirley Basin comes online here, growth plans, et cetera. Do you see the company being sold, or do you see it continuing to operate independently, maybe being merged with another company? What are your thoughts over the next 5 years on as this market moves, as the cycle progresses on the uptrend? What do you see more or less as an end result here that folks can potentially expect over this cycle?
Sure. A lot of times we only talk about our two flagship properties, Lost Creek and Shirley Basin. But let me focus on Lost Creek just for a moment. That is a big project. And the resource that we have in the ground there, it's a really nice resource. It's proven itself, time and time again, fantastic recoveries. But we've got a total of 35,000 acres there. We've carried out exploration projects several times. And every time we've done that, we've been able to add significant pounds to the resource. And we think we've got tremendous potential to continue to add pounds to that resource going forward. So I think that's an important part of the story that we may not always comment on as much as we should. So we think we can grow the company organically right in the immediate proximity of the existing licensed area and plant, and be able to feed directly in through pipelines. Beyond that, we've got other projects out there that we don't talk about much. Lost Soldier is still out there. It needs considerable additional work before we begin licensing that one. But that one's out there. It's got over 3,000 drill holes in it. So we have a tremendous amount of data to work with there. And it's a real resource. We've got other projects out there that are not connected to Lost Creek, like North Hadsell, that we are very optimistic about. We believe that it's got some resource on that we need to go out and chase at some point. So we think we've got some opportunity for organic growth, especially in the immediate area around Lost Creek. But moving beyond organic, moving into M&A, getting larger is probably a good thing for us. It gives us a little more optionality, maybe a re-rating in the markets. So, and it would help drive down production costs as well if we can divide that production cost against 2 or 3 or 4 operating facilities instead of just 1 or 2. So we are interested in M&A. We are always looking for opportunities in that regard, but we're not going to get married to just anybody. As you know, and as our shareholders know, we are a mining company, a proven mining company. There are a few other mining companies out there that we believe are worth looking at and talking to, but there are also a lot of companies out there that are not worth talking to, that are essentially just marketing companies. They're pumping up their stock, but with little or no capacity to fulfill the promises they're making. Since we're experienced miners, our entire team, we know the difference between the two. No one is going to pull the wool over our eyes. And so if we're going to go out and get married, it's going to have to be somebody that looks a lot like us, a company that has legitimate resources and a legitimate shot at putting those resources into production within a reasonable amount of time and at a reasonable cost. We're not interested in talking to a company that's got resources that are going to cost $100 a pound to put in the can. That's inconsistent with who we are. So yeah, we're looking. We're always interested in talking to people. You know, we go on dates, we check out other companies, but we've been very reluctant to consummate any deals. You know, in the history of the company, there's not many deals we've jumped into, and I think the board of directors and Jeff have done a fantastic job of vetting those in the past. You know, really, the most recent acquisition is Shirley Basin, and that's turned out to be a really good acquisition. We're going to be able to bring that into production at a very low cost, low capex as well, as well as operating costs. So that was a great acquisition. That's what we're looking for, those quality projects that are consistent with our objectives, consistent with the history of the company going forward. We think that's only fair to the shareholders. We don't want to change how we approach the market. So yeah, that's kind of our strategy, Andrew, and how we would like to go forward. We would like to get bigger, but not at any cost. It's going to have to be the right project.
John, well said, and I think you cut a lot of folks out right there and put it in perspective for folks who are out there dreaming, thinking that you know, things are much better than they look. I appreciate that comment. Not many folks make that comment. Just a few follow-ups on that. Do you see that the UrEnergy strategy remain in the U.S.? Do you believe that the U.S. is the key place to stay? Would you guys consider some type of arrangement that is outside the U.S.? Maybe you just speak to that for a moment.
We would certainly consider M&A outside the U.S. However, it has to be in a mining-friendly jurisdiction. It also has to be in a safe jurisdiction. I'm not going to send my employees to a country where I can't assure that they're going to be safe. So you've got those two criteria. But, you know, very importantly, there's got to be that synergy. There's got to be a real reason to do M&A outside the country. And if that synergy exists, then yeah, absolutely. But if it doesn't, then no, we're not interested. And let me give an example of that. We have an outstanding regulatory affairs team. We have an outstanding production team, legal team, but they are U.S. centric. We understand the U.S. So I'll just use as an example Australia. If we were going to do M&A in Australia, it's a different legal system. It's a different regulatory system. Mining techniques are different. Even though it's in situ, it is a bit different. So we would have to evaluate, is it worth the M&A? Is there a true synergy there? Or if we make that acquisition, are we still going to end up with two subsidiaries that are fully staffed with no synergies between each other, and the only employee that's shared is the CEO? That takes the shine off the penny. I'm not saying that you still couldn't come up with a good deal that makes sense for the company, but that takes a lot of shine off the penny. So there's got to be legitimate synergy, a real reason, a real quality asset in a safe jurisdiction. So to answer your question, yeah, we'll look elsewhere, but you have all those caveats that you have to throw on before we're going to make an affirmative decision to proceed with M&A.
Well said. It certainly narrows down things significantly. And even in the U.S., John, as you and I can talk, we can weed through quite a few pretty quickly. Outside of talking majors, which there's not too many of those right now, but I suspect majors will be a different face as this market heats up. Back to talk just briefly expiration. When do you think some expiration program will slot in? Do you see that that's essentially after Lost Creek is brought back online? When do you see that you guys will go out there and do a little bit of work with the drill bit?
So we haven't done any exploration for a few years. Again, the reasoning behind that is capital is precious, dilution is a dirty word, and we've already got a great resource in the ground. We've got well over 10 years of production. You know, at Lost Creek, our measured and indicated resource is 11.9 million pounds, and we've got another 6.6 million pounds of inferred. That's a lot of years of production at a million pounds a year run rate. So we didn't feel like the market would reward us for growing that anymore. It's not going to help our NPV to bring more pounds in when you've already got, 17, 18 years of production resource in the ground. So because of that, because of the desire to preserve capital, because we've got great resources in the ground, we've decided not to do exploration. However, when we get long-term contracts signed up and we begin to chew away at those resources, produce them, we want to replace them. And that's the point where we're going to reverse that decision and say it's time to go out and explore in the immediate area of Lost Creek, replace those pounds that we're producing. So yeah, that's contracting is really the point where we're going to change our strategy and go back out, get the rigs out there and start exploring again and bring those pounds back in.
Makes sense, absolutely. Miners consume their own balance sheet once you get to that point, so obviously you need to find ways to supplement that balance sheet. So certainly a great strategy there, and obviously with cash flows coming out of Lost Creek initially, I think that makes sense to start looking at that. Well, John, let's leave it there. I just want to wrap up here. For potential investors who are on the sidelines listening, market cap of UrEnergy stands at about $408 million US. What would you say to them about taking a stake in the company at current levels?
I think it's a great time to be jumping into the uranium space. There are so many factors out there, catalysts that are coming to fruition and that potentially could come into view that everyone should be considering the uranium industry. Very briefly, there are three things out there that are really driving things. First of all is green energy. Regardless of the geopolitics and what happens there, the nuclear build out globally is expanding rapidly. China, for example, has announced plans for 115 new reactors in the next 10 years. England, France, Turkey, Finland, even the U.S., there are reactor builds ongoing, and South Korea, other countries as well. And it's all because of green energy. So from that aspect alone, I think nuclear has a very bright future. And then you throw in the geopolitics, you throw in the Sprott Physical Uranium Trust, the pressure it's putting on the market. I think there's a lot of potential in the short term to increase the value of the market. But specifically about UrEnergy, why should you invest in UrEnergy? We are a proven entity. Lost Creek is a real project. We have proven production. We've produced 2.7 million pounds at a very low cost. We've got a great staff. We are ready to ramp up. We're well financed and ready to go. So real company, real pounds, real production potential going forward. So would love to have more shareholders come along with us for the ride. Check us out.
Plus you got the CEO actually in the facility.
Yeah, that's exactly right. I am boots on the ground. I'm here in Wyoming. I know that facility extremely well, like the back of my hand.
Absolutely, kept it polished. Well, John, how about best way for investors to reach out to the company?
Take a look at our website, www.ur-energy.com. We have a lot of great information on that website. In fact, it's a relatively new website, so if you haven't been there for a while, please go check that out. But if you want to reach out to me directly, I keep an open line. I'm very easy to catch. Email at john.cash, C-A-S-H, at ur-energy.com. Or you can catch me on my cell, 307-267-7003.
John, appreciate it. Thanks for taking the time and keep up the progress at UrEnergy.
All right. Thanks a lot, Andrew. It's great to catch up with you.